In other business news, a further improvement in South Africa's economic outlook has been attributed to the latest F&B BER Consumer Confidence Index. The second quarter reading sits at minus 12 points from the previously reported hike of minus 17 to minus 15 points in the first quarter of this year. Positive political developments, along with an ease in load shedding and plans to address the current logistical port challenges, have been cited as contributing factors. Economist Koketso Mano discusses this with us. Good afternoon to you, Koketso. On that positive side of news, it is improving in terms of economic conditions in South Africa. Can this be sustained, and what then is the near-term outlook?
Yes, and thank you so much for having me. We are hopeful that this will be sustained. Obviously, it's hinging a lot on what happens with the political climate, whether the GNU will actually be properly formalized and show some stability going forward. I think those are very important factors that will continue to influence confidence across the board, whether it be business or household or consumer, rather. So we are seeing that improvement coming through. This survey, fortunately, was done post the elections. So some of that positivity has filtered through to this survey. And if this is anything to go by, I mean, it could filter through to the other surveys that we've had, that were done or conducted before the elections. So based just on this, I mean, we could expect further improvements going into the third quarter. And as you've mentioned already, I mean, less incidents of load shedding would be supportive here. A stronger rand, if the GNU is actually properly formalized, will be something that also contributes to lower inflation and lower interest rates. So yes, we're hopeful that this confidence improvement will, translate into real economy gains with more spending, more economic growth, and so forth.
You touched on the political aspect when it comes to the South African economy in this regard. What then could derail the outlook, especially as we've been seeing these gradual improvements over the past couple of months?
Yes, I think besides the political climate, but the political climate is actually quite important, given that it affects, the ability for South Africa to improve, continue to see that reform agenda taking shape, which remains very pivotal for us to see improved economic growth, our ability to produce, so productivity as well. So we are hopeful that this GNU will actually take shape, because it hinges or it affects a lot of things that we are expecting in terms of our outlook. But yes, lower GDP growth will be something that derails, confidence. A weaker rand, higher inflation would also be stuff that really, or fundamentals that really affect confidence. If you look at the index and these outcomes that came out today, you will see that consumers are generally less pessimistic about their personal finances. It's more the economic performance or the broader economic climate that is really weighing on confidence. And that's also affecting, consumers' perception of whether this is a good time to purchase big ticket items. So we see a lot of these economic headwinds affecting consumer confidence. And unfortunately, if they continue going into the forecast period, it will continue to weigh on people's ability to, or perceptions of how the economy is doing, and also their willingness to spend.
Lastly, on the latter point that you make there, how important is consumer confidence when it comes to it being translated into buying appetite, especially under the current climate of financial pressure?
Yes, it is very, very important. I think one step into the process is that you have the confidence, right? That the economy is going to be conducive for your personal finances or for broader economic climate, that you believe that is a good time to purchase durable goods, make investments, whether it be property, purchasing a new vehicle. So all of those do, have a factor of whether the person actually ends up purchasing those things, but they have to have the confidence first. So they have to have a good perception of how the economy is doing first. And I think one other thing to highlight before you let me go is just the divergence between the different income groups that we're getting also from this latest reading. Number one is that when you look at the lower income groups, right, so your low to middle, and how they're categorized here is that anyone earning less than 20,000 rands. So those income groups are the ones that are showing you improvement in sentiment, right? And you would remember, I mean, we have lower fuel prices going into June. We have lower food inflation this year. We have also the SRD grants that, had a little bit of an improvement following the budget. So that started in April. So that will be something that really supports your lower end of the income spectrum. But when you look at your high income groups, I mean, that sentiment hasn't shifted much. I mean, it's also still reflecting the fact that high income earners are more likely affected by confidence and political issues, your structural issues, and hence we're not seeing that improvement. So once again, it's showing us that we need to see these real economic gains and some of these, structural improvements, government, state capacity, productivity, in order for people to feel really comfortable to make these big investments.
Fascinating findings. Thank you as always for your contribution. Koketso Mano is an economist with F&B talking us through their latest Consumer Confidence Index, seeing some improvement.